Folks, welcome to the best stock picks video. This is Bob Desmond, and before you even go any further with watching this video, you should be asking yourself, before I watch this video, how did this guy do last week? Well, we did very, very good for a market that's been in the decline of the IWM, the Russell 2000 anyway, and the retail stocks, of which we've been shorting along with the high beta names for quite some time now, since the momentum trade stopped working back in March. I've been telling my members, avoid beta. Beta is a measure of volatility. Anything with high beta is going to get killed. That goes for your momentum stocks, such as Facebook and Tesla, which we shorted and profited on. It goes for your micro caps, like the IWC. Check out that ETF. It's been destroyed. Names such as VTMB, my penny stock pick of 2014, which we've traded twice so far this year, once for 750% gain and another for over 70% gain, has fallen apart. We've been out of it. We haven't been a part of it because we knew beta was going to get killed. So what have we been doing? We've been looking towards the short side. We knew retail wasn't working. If you take a look at the chart of the retail holders, it's been getting hammered like a baby seal. So on April the 22nd, we opened up a trade in PBY. I wish I could say I was short this entire time down. I wasn't. But we were looking to get long back here while it was in this pennant formation, and traditionally, up until March, stocks that were in these formations, triangle formations, pennant formations, once they broke out, they were safe to buy as a momentum trade, a continuation breakout trade. Then it failed, and failed miserably. Now, we didn't get long of this stock, thank goodness. However, once I saw it break down below the lower band of this consolidation range, you knew you had to stay out of the way, and earnings came out and simply hammered. Now, using our rule of waiting for a dead cat bounce before we open up a short position on a stock like this, we got it, and that was on the 22nd. And we looked for where it had found prior resistance, and that was right here on the 17th. And sure enough, on the 22nd, it failed to hold or failed to close above that resistance level. So we took our shot, we got short, and it worked out for us. And on Thursday, May the 8th, on my market wrap commentary, I went over why I thought that we needed to close out our PBY trade, and it was because the ADX lines were showing some strength. Therefore, we wanted to look to book our profits on any strength on Friday morning because it's short covering Friday. Sure enough, our hunch played out to be accurate. We booked our profits of 6% or $1,800 on PBY. The next trade was Tesla, and this one we really made our week. A really, really great trade. We opened up this trade on May the 6th and closed it out on Friday morning, right off of a retest of the 200-day moving average. We didn't want to stay short of this one all too long. Again, we're concerned about short covering Friday. We're concerned about all the data, the economic data that's set to be released next week. Not because I believe that the economic data is going to be good. It's because I believe that the financial news media, they'll take any bit of good news and they will spin it into a day's news cycle and try to spike the market. So while we have our profits on Friday, we know that there's going to be a short squeeze, as it generally is, especially after a market sell-off on the IWC, the micro caps, and the Russell 2000. So we want to book our profits and get out of the way. And that's what we did on Friday. So with Tesla, we booked profits early in the morning, and sure enough, what did they do? They reversed it right off the 200-day moving average. We're glad we're out. If we get a rally up to, say, the 190 area, thereabouts, we'll look to short Tesla once again. But first out, best out, and that was a 14% profit, or $8,679 in profits on Tesla within 1 week. So a very, very good trading week. PBY, Pep Boys, and the next one up is Facebook. We didn't make a huge profit on Facebook. It was 3%, $980, because I was so overweighted with Tesla. So our position was small with Facebook. So I posted a video on my blog, and you can go and check it out if you'd like, where Guy Adami says the day before earnings on Facebook to go ahead and buy the stock in front of earnings, and I just wanted to, I freaked out. And sure enough, if you listened to Guy Adami, this is where you would have been. From 63.45 all the way down to 54.46. Hopefully you would have gotten out on this rally up to 62.39, or else you'd find yourself back down at 56 and change. Just a bad call, an irresponsible call by Guy Adami. But what else do you expect, really? So we opened up our trade of Facebook on May the 6th at 58.87. We booked a 3% profit or $980 gain because I thought it was going to go down. I still think it's probably going to go down, but why fight it? Because the weekly chart is still trading above the upper band of its breakout point. So we're cognizant of that. That's part of our rationale for covering our short position, besides the reasons I gave earlier with regard to the economic data set to be released next week. So first out, best out. We booked up profits. A great trading week last week. Now let's get to the stocks that we're looking to monitor and potentially trade this coming week. At the stocks that I went over that we booked profits on last week, those do not reflect the stocks that we are currently long of. We opened up long positions that were what I qualify as extreme oversold trades. And one of them is working out really well. The other one is consolidating. So we're looking to add more. And this is our way of reducing our risk to reward profile when we are in a market correction. And I believe that this market may just see a rally this coming week. I wouldn't be a bit surprised. In fact, I'm betting on it. However, I doubt that rally is going to hold. I mentioned it on Wednesday when the market closed bullish. I said, it looks like we're going to rally into Thursday. The question is, how will we close? How long will this last? And it did not last long. We flashed a key reversal in this market on Thursday. And I think the same is probably going to happen in the coming week. We're probably going to open up strong. The media will spin the data, any news, as positive and try to get the markets rallying. Will it close that way? You got to watch the volume. So first stock up is MCP Molycorp. I'm going to go over the daily charts. The weekly charts I'm going to review with my members on the week ahead commentary. I've already released the market pulse check. That video is about 20 minutes long, and that goes over the health of the entire marketplace, all the U.S. indices, the Chinese indices, because I'm concerned about China, the currency markets, the bond markets, etc. And that just gives us a good idea of how the markets stand as we proceed into the coming week. The next video, which will be released today, is the Focus Stock video. That will be a review of these charts here that I'm going to go over in the next few minutes, except there'll be multi-period reviews, meaning right now I'm reviewing the daily charts, but on the Focus Stock video, I'm going to go over the weekly, if not monthly charts to identify historic support and historic resistance levels. And if necessary, drill down to a 30-minute chart and review good entry points. How are the intraday charts setting up for Monday's open to see whether or not we'll be getting long of a stock on Monday morning or we'll be sitting on the sidelines waiting for it to come to us. So that's the game plan. That's the difference between what you're watching right now and what's posted as premium in the members area. I have a 14-day free trial offer if you want to check that out. All right, so MCP Molycorp. You can see that we've been in a downtrend for quite some time since summer of last year. And we were in a pennant formation, and that formation failed. So now we are declining dramatically on institutional distribution. This is not mom and pop selling 100 shares apiece. This is Fidelity. This is Goldman dumping their shares, and you do not want to fight these guys. I may be a contrarian, but I'm not suicidal. So we want to identify where historic support is and then come up with a game plan for entering MCP as an extreme oversold stock. Next stock up is Everywhere Global. I've been watching this one for 2 weeks now. And we've started watching it back here. It looked oversold then. You read Technical Analysis for Dummies, they would have told you to buy it back here. No worse advice could you be given because you would have gotten hammered like a baby seal. You do not want to just use rules of thumb that can get you slaughtered. You need to use your oscillators along with your price action, along with your volume action to dictate when you want to get involved with the stock. Is the stock at historic support levels? If not, then how do the daily and intraday charts set up? Those are the questions that we'll look for before we get long of a stock that's extreme oversold. Now, this may look like to you, as does Molycorp, that we're looking to catch a falling knife. That's not true. Were I not to have had a proven system to buy these stocks, meaning at the appropriate RSI levels, at the appropriate volume levels, flashing appropriate bottoming signs at historic support levels, then you would be right. Catching a falling knife is catching a stock right after it announces bad earnings and hoping, you're praying that it doesn't go any lower because you don't have an idea of where historic support is. That is hoping when you should fear. And the reason why traders aren't successful traders when they try to catch falling knives is because they don't identify opportunities, as you see right here, where rather than hoping when you should fear, you're fearing when you should hope. Think about that. That's from Reminiscences of a Stock Operator, the greatest book out there for stock trading. I strongly suggest that you read it if you haven't done so already. So what I see here amongst this pile of mess is a contrarian opportunity. I see a key reversal, a bottoming tail, which is a sign of support below, and we're going to drill out to the weekly charts. If there's no historic support below that level, we'll take a look at the monthly charts. If it doesn't exist at all, if we're at all-time lows on this stock, then we'll go to our daily and intraday charts to look for a good setup. And that's what I'm going to be discussing with members on the week ahead commentary. We have an RSI at 11.07, a great opportunity. The volume's still a little bit high, so the time may not be right just yet. So again, this is one of our focus stocks for the coming week. IMN, Imation Corp, never heard of it, don't know what they do. Slaughtered, but in the ashes we see opportunity. And on Friday, it flashed a reversal. I do not like this topping tail. This key reversal does not tell me that we're heading higher on Monday. What it does tell me is that there's resistance at $3.70. We need to pull back and take a look at the weekly, monthly charts for historic support levels because we could head lower on IMN. RSI is at 18, so it just barely makes it onto our watch list. CECE, Keco Environmental Corp, I don't know what they do. Doesn't matter. All right, what did the markets tell you to get out of the stock? Because I firmly believe that the markets send you signals, and using stock charts is critical to the success of the small investor. We are not fund managers. We do not have the staffs to review financial reports. We do not have the funds to hire forensic accountants to do our due diligence. We do not have the funds to do channel checks on these companies. We do not have the influence to get the information out of them. So if you're looking at the fundamentals that's published on Yahoo Finance and betting that a stock is cheap and that because it's in a decline it's getting cheaper, that's the way to get, that's like a lamb getting led to slaughter. I'd much rather prefer to take a look at the stock charts because the markets send you signals. And in the case of CECE, this was a hot stock until right here. 2 days, it flashed topping tails on day 1 and a key reversal on day 2. That's all the signal I needed to get out of the stock. And right where it found support here at 1758 on October the 21st, I'd be looking to short this stock. And I would have drawn my trend line, and the minute, as it did on October the 31st, Halloween, it closed below that support level, that was your signal to open up a short position, and you would have been a happy camper. Fast forward to a double bottom setup off the 14 level, the stock was a long. And if you enjoyed this rally up and you saw this topping tail, which should have been expected, not that we couldn't have broken through it, but you should have expected buyers back here to distribute their shares because the psychology of the market is all they want is their money back. They just want to get made whole. They don't want to make money anymore. They just want to get their money back that they invested in CECE. It's as simple as that. And then when we pulled back off of that resistance level, rallied back, and we just barely made it back up there, that was your signal to get out. It was a double top, and sure enough, we find ourselves in the position that we do now. Now, amongst the ashes, we're looking for opportunity. So we have an RSI at 17.34. We met a support level, but closed below it, which implies to me that we're heading lower on the stock. The volume action clearly shows that you have institutional distribution continuing. Again, I might be a contrarian, but I am not suicidal. I will not fight these guys. So let them do their selling. all the selling that they want to do and all the shorts that believe that the stock is going lower, and as they get greedy and complacent, as these institutions dump their shares, we'll be looking to open up a position in CECE in anticipation of a short squeeze, and we will be there lying in wait to enjoy that rally higher. Do I believe that we're returning to all-time highs? I don't plan on being there for it. It's a trade. We want to enjoy that short squeeze higher, book our profits, move to the sidelines. So by no stretch of the imagination do I plan on being long of CECE on Monday. I think we're heading lower, but we'll probably be long sometime next week at a price level of our choosing. If it doesn't reach that support level, we won't be involved with it. But again, we need to take a look at the weekly, monthly charts, intraday charts to decide what is the best risk to reward entry point. Next stock up, DARA, DARA Biosciences. Another stock getting hammered. RSI is at 16.40. We don't know from this chart where our historic support levels are. We'll need to check out the weekly, monthly charts if necessary. And if there is no historic support, we'll need to rely upon our daily and intraday charts to look for a good risk to reward entry point. So DARA is obviously getting distributed. Volume bars still appear to be high relative to their normal average. So we like DARA as a potential short squeeze candidate. And yes, although it is trading below $2 per share, there are shorts in here to get squeezed. So we will try to take advantage of them, getting complacent. Look at this. If you're short in this stock, wouldn't you want to think about taking some profits? Obviously, they haven't, because we've been closing at or near the lows each day for the past week. Next stock up is AGTC. This is a new issue, relatively new issue. So I like this stock from the daily chart. I see bottoming tails here, which is a sign of support. I also see topping tails. So we're going to rely more upon the intraday charts to dictate when we're going to get long of the stock. And I want to draw some trend lines on this chart as well. And I'll share that revised chart with members on the Focus Stocks video. And I'll post that on the members site later on today. So AGTC potential long. GORO. All right, so what we have here is the gold mining stocks getting hammered like a baby seal. Why is that? That's because the US dollar is getting poised to rally because Mario Draghi out of the EU floated a trial balloon about reducing rates in the EU come June. Now that is bearish for the euro. That is bullish for the US dollar. Gold is priced in dollars. Gold is declining, and GORO and the other gold miners follow gold prices in price correlation. So therefore, the markets have been sending us signals that you need to avoid the gold mining stocks for a while now. But GORO has a large short interest. We have a good idea of where our historic support level is because we've traded this one several times in the past, and we know exactly where we want to get involved with GORO. We'll be looking to get long of it. RSI is at 21.20. I still think that we're going lower, as noted by the rising down volume bars. Again, institutional distribution, but we will take advantage of those shorts falling asleep at the wheel, thinking that the stock is going to zero when it's not. There will be support levels that we will be looking to get long at. We'll nibble, 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 build our position. We'll keep it quiet in our accumulation, and then they'll wake up and find themselves one morning in the middle of getting squeezed. XLU, the utility sector, daily chart. It's been on fire of late. It's broken down below the lower band of its rising uptrend channel. This is one where we may be looking to short, not long, but short. My only concern is whether or not we're going to see some strength return to the XLU on a double bottom setup off the 50 level. So I'm not going to be any rush to get short of XLU. We're going to allow the markets to send us signals. Now, traditionally what will happen is you'll see a rally and an attempted recapture of the lower band of the rising uptrend channel. Those are folks that just can't believe that the rally is over, and they'll still try to bid the shares back up. or it's institutions nibbling on the shares because they need to get out of their position. They'll try to get the dumb money excited, and then they'll dump all their remaining shares, and that's what we want to look to take advantage of, is institutions trying to scare the amateur money off the bench, thinking that they're missing the boat on a dividend play. All the while, the institutions are waiting in wait to just dump the remaining portion of their shares at higher prices, and they'll slaughter the little guy. It's the classic event that occurs at every market top, at every top in every sector. That's what occurs. It's the little guy gets left holding the bag. Next ETF we're looking to open up as a short is the FXC. That's the Euro Trust. As I mentioned, Mario Draghi, he is floating trial balloons that they may lower interest rates in June. If that occurs, you should expect some weakness in the euro. Now, the weekly chart spells a better picture. I'm going to go over that with members on the week ahead commentary of why we're looking to short this ETF or currency. However, it hasn't met the criteria to pull the trigger on it yet. I think that it soon may will, but I'll go over that with members on the week ahead commentary. But as of right now, folks, I wouldn't short this. We have gapped down since Mario's announcement, but that doesn't mean that we're going straight down. My guess is that we will see a counter trend move off of what you, right here, if I drew a trend line up, we're right at the lower band of the rising uptrend channel. I would not short it at this point in time. The argument could be made that you may want to long it in a gamble or a bet that Mario was just floating a trial balloon and may pull back, and you could buy it at the lower band of the rising uptrend channel as a good entry point. That's a fair argument, however, not one that I believe. However, we'll be looking to open up our short position on the FXC, and I'll go over that in great detail with members on the week ahead commentary. Folks, if you're watching us on the website, you're not a member of our opt-in email list, please enter your email address, get alerted to our best stock picks video. We hate spam too. You will not be spammed, I can guarantee you that. If you're watching this on YouTube, please subscribe to my channel. If you're watching this on either YouTube or on the members area, leave a comment below. And I will talk to you soon, folks. Have a great, profitable trading week. Happy Mother's Day to you mothers out there. And watch the charts, folks. The markets send you signals.